Brian Shannon from AlphaTrends.net. Today is February 17th, Tuesday, and this is the second time I've recorded this video. I've just wasted an hour and a half with my computer. Seems to be some kind of problems, which I don't know what they are, but I've got my crummy headphones microphone on here, so I wouldn't expect the audio will be any good, but it'll be better than the last time I recorded because it didn't have any at all. So let's take a look at the markets. The NASDAQ obviously was lower by about 4% today, back below the 10, 20, and 50-day moving averages, and also below the VWAP since the beginning of the year. We've been keeping an eye on that, so let's just take another look, see what the average price for the NASDAQ 100 is. You can see it's right there at about 29.85. On the daily time frame, let's take a look at the 30-minute time frame rather. You can see here that we did have some further weakness that took out this trend line, obviously, and this prior level of resistance at 29.60, which we had been monitoring as potential support based on just traditional support and resistance, but also based on this 2/3 retracement of this low from January up to the February highs. So we're below that 2/3 retracement, and we've got the let's take a look here. We've got this a little bit of support right in here at 29.15 or so. Next, more important level of support is potentially going to be found right here at about 28.75, and then of course these lows here just under 28. The market remains in big danger of further continued downside. The path of least resistance on the longer term time frame, the weekly that is, continues to show weakness, and when we have mixed messages from different time frames, it's the larger term time frame that usually exerts its force here, and that's exactly what we're seeing happen in the NASDAQ. We were looking for the potential that maybe it was going to get above 30.80. That would have been a reason to maybe get a little bit more optimistic about this market, but obviously the gap lower and the fact that we're below this declining 5-day moving average, it's declining so steeply, puts all bullish arguments to the sidelines once again as the bear market continues to rage throughout. So we're still stuck in this range, really, 31.80, 28 on the downside. We're getting down towards the low end of it again, and based on other markets, it doesn't seem likely that it will continue to hold. One of the best cases for not being able to pick a bottom is the USO. The oil market gapped lower as well. A lot of people are looking at talking about a short squeeze potentially coming. Don't listen to that. The market's in a downtrend. The shorts are in control here. Forget about Hibbert's curve. Forget about global demand. Whatever. Any fundamental argument you can make takes a backseat to the only thing that pays us, which is price. And right now, there's the significant level that this market will have to get above before we can possibly consider any long side trade is above 27.50. That's $4 away. If you're going to trade this thing on a 1-minute time frame, even in there you can see the danger that it got up to this VWAP a couple times throughout the day, and then I don't know if there was news, don't really care either, but it got smacked again intraday right here at about 2:30. So oil continues to be in a horrible downtrend. No reason at all to be involved on the long side. The Russell 2000 is right down to the bottom end of this range. How it's holding up is beyond me, but there's apparently some people in there defending this level. If that breaks, which I think is likely, then the next area of potential for support would be about 41.5, and below that, this thing could continue to unwind pretty dramatically down towards this $37 level. This is what I was talking about yesterday in the live broadcast. Unfortunately, it gapped down below. What I was looking at is I thought it was going to, based on Sunday nights or Monday night, the holiday, I thought maybe it would gap down, rally up, and give us a chance to sell short for a big move. Instead, today was a very choppy session. Just a lot of back and forth, really fighting that daily VWAP. Gave the buyers a little bit of reason to get excited here late in the day, but then they pulled the plug and market finished right near its lows, which indicates that further downside is going to continue to be likely. The more important level of potential resistance right now is this 43.60 area. Of course, we've got all kinds of other resistance levels up above at 46, 47.50, and some of the other numbers we've been monitoring. Right now, there's nothing to indicate that we're going to be able to test any of those areas, but the lows from last week were tested as this prior support acted as resistance in here today. We're down at the bottom end of this range in a primary bear market with a weekly time frame that's still looking horrible. So it just continues to be a very dangerous market. I would not suggest anyone do any buying in here for more than these 1 minute time frames, but even there they move so darn quickly that you gotta, let's say you get involved right here. You have to take partial profits as soon as it moves 20-30 cents. I always suggest taking at least a small, half your position off, let's say, and then raising the stop to break even on the balance, and that'll avoid you from getting chopped up in these moves if you're fortunate enough to catch this rally instead of chasing this one and this one and this one, which again, it was a very choppy session today. So how you traded it is going to be different than how I traded it or anyone else, most likely. The financials finished at an all-time low in here on this weekly time frame. You can see that we finished right down at the low. There's no one in here that can claim, except maybe 2 or 3 people down here are the only people that can, under this line basically, can claim that they've picked the bottom in financials, and that's not likely to hold for very long either. But on the daily time frame, we're obviously broken. We're at I don't know if it's all-time lows, but when you look at this weekly time frame, we're at multi-year lows in here. There's nothing to suggest there's support anywhere in here. We're in uncharted territory. So the risk remains to the buyers, and that's just a good group to avoid. It was just constant, steady pressure in here. Never made it back above VWAP the way some of the other markets did, but just continues to act terribly. Semiconductors broke down as well. I don't even know if this recording is going to work, so I'm going to go a little bit quicker here, and we'll wrap it up with a look at the SPY. The spiders were down $3.50. They are more broken than really the Russell 2000 because they're stuck below this level. They gapped down below it, tested it, and then stayed down. It seems as though there's going to be another big push lower. Speaking of that, the real estate also continues to act terrible, the IYR, and this still looks as though it might be leading the way as far as the Russell 2000 goes. And back to the SPY though, spiders are down at the low end of the recent range, below the low end of the recent range, at new closing lows for this year, and these lows look like they're back in striking distance again. Some of the levels I was mentioning in last night's videos are still a possibility as well, down near 70. So maybe another 10 points, 12% lower. It continues to be a horrible bear market, and path of least resistance is lower. If you're trying to pick bottoms, you're playing a losing game.